Hi, this is Brent with another chart breakdown for Trade Therapy. Welcome to the Trading Couch. It is Monday, June 16th, about 12:30. We're talking about Bitcoin, one of the most important charts in the current market cycle, and also the main focus of our top-down analysis for our Clarity Spotlight on MicroStrategy last week. We're looking at a weekly chart from August, I believe, out of our coverage on Doge back in August. But you can see that we identified this Wyckoff spring move in this textbook reaccumulation structure here. The charts really show us what institutional reaccumulation looks like at scale. Retail was shaken out here in 2022. You can see the accumulation structure that formed almost textbook up to the top of the range with a back test on it. Also back testing these weekly moving averages that had constricted right here and provided the support for this markup run to all-time highs, which led to this reaccumulation structure right here. So what we've seen really is larger players reloading, absorbing supply. Once they reaccumulated their position, they pushed price up to all-time highs. We're now over into a December chart here. You can see that we were calling for a sign of strength here at the 1272 at 103. And what this really shows is that was textbook accumulation that we just went through. Price has already pushed above all-time highs at this point. Institutions weren't concerned about these price levels in here. Only retail was concerned. And headlines are what is used to elicit emotional responses out of the retail investment community. That's why you see price doing what it's doing and extending up here. It did hit the 1272. We did call for that to be a sign of strength. And so that's what occurred. A sign of strength was formed. A backup to the 55-week exponential moving average occurred. We're now in a June 12th chart. This is from last week. You see the giant inverted head and shoulders, a pattern with the neckline that was retested here. And now we're back up to pushing all-time highs. So if we zoom into a daily view, there's a couple of things that really stand out about the daily view. One is this channel that has formed right here, been extremely well respected. That's a sign that algorithms are heavily engaged, deeply engaged, and that's not surprising. The second thing that really stands out is these pullbacks. These pullbacks have all found support in this prior demand zone here. What that tells us is we're not seeing distribution. We're not seeing panic volumes coming in or any kind of a structural breakdown. In other words, what we're seeing is dips are being bought. They're being bought, but quietly. So there's no FOMO going on yet, just disciplined, methodical absorption. Once we get into these extensions, that's when we'll start to see the FOMO come pouring in. So what does this tell us about the broader strategy? It really tells us that institutions are managing this cycle a little bit differently than the previous cycles. I've now jumped over to a current, this is a live, clean Bitcoin chart here. And you can see that the hype cycles were much longer than they have been. The hype cycles are longer, the pullbacks are very sharp. And at least so far in this cycle, we have not seen the hype cycle extension out of this structure into the higher target ranges. The institutions have been happy just holding this range right here and testing all-time highs right here. What we're looking for is these upper targets from this cycle. We're looking for that hype extension to get up and out of this range. Our first target is this 1414 Fibonacci at 128, and then on to the 18 extension at 173,779. So those are our immediate targets for Bitcoin. Could Bitcoin overshoot that? Possibly, but we're already late in the crypto cycle. That means we're entering the phase where price action becomes more erratic and risk increases from late entrants coming in. So we're watching signs of a climactic behavior. We're watching signs of some sort of a hype thrust that goes up through here, especially on shorter time frames. But unless we see confirmed distribution, unless we see high volumes coming in near the tops here, we're going to be holding long. We're going to be looking for extensions into the final stages of markup. We're not going to be looking for a confirmed top. We're going to be looking to sell into strength. but we are going to be waiting until we see that hype extension away from these moving averages and some sort of a hypodermic price movement getting up into these higher ranges. Hope that was helpful. Thank you for watching. Read Clarity, sign up for Clarity, get our full weekly breakdowns and institutional positioning and institutional strategy every week. Don't just try to do this via the videos. Anyway, we'll see you next week.